Alright, it's Chun Chun here, and for today's topic, we're going to talk about getting from A to B without paying tax. And first and foremost, I know that paying tax is our responsibility, but actually, for government, they are very encourage us to go and do investing in real estate. That's why they came out a lot of tax benefit that we can plan book out so that we can save it and you can create more profit from your property. So first, this book actually is from US, so they will talk about the tax law of US. Actually, that's better if you have in your country, no matter what you have, that's better you can consult with your tax advisor first so that you can have better movement and the law or everything else so that you can know much better about your law in your country. For example, it's like currently Malaysia, now they are excluded RPGT, which means that you sell your property, you can exclude the real property gain tax, so that nowadays a lot of people they prefer to sell and then change the property so they can save a lot also. So the tax law also will always change and you better follow up with your tax advisor. So let's straight to the point. Actually, when we talk about tax, there are property tax, which means that they have 4 property tax and how they are taxed, you will know. Then the first is property owned by for development, which means that the property you own and it is for development purpose. This method is taxed as ordinary income, which means that the income that you tax. Then the second is short-term property. So this type method is taxed as short-term capital gain. So how much you gain, the profit, you flip and then you get the profit, so that you tax is by the capital gains. So number 3 is personal residence, and this one qualified for a gain exclusion based on material status. Number 4 is investment property, and this is the place where real tax shelter advantage kick in, which means that we need to talk about number 4. So actually, the previous chapter we already talked about when you want to do some investment, actually you can put on annual depreciation deduction in your expenses so that you can pay less tax, so that you can gain exclude and you make your expenses more higher so that you can pay less more tax. That's a normal method. So actually we talk about this law is 1031 exchange tax way, so that you can get and build your wealth so that you can earn more profit. So actually there's 6 rules of 1031 exchange, which means that you exchange your property. And the rules number 1 is you're gonna know that your property is whole for investment. For example, is now you currently own a property, then the property is your investment property. After that, you think about you want to sell out your property, then you need to change to another property, which means that, for example, you from a smaller property, you get from a small property, then you get a bigger property or change it to generate more cash flow property. So you want to sell your current property out, then you change to another new one, investment property, and you have to make sure you do it is because of the investment. 2 is your investment property. You want to change from one property to another property, which one A to B. It's not you go and from your current property, then you want to change to another property and then you want to sell it. And that's not. It's A to another property. So it's investment purpose. That's rule number 1. Alright. So before you do with it, that actually you need you better have a good intermediary, which means that and you make sure you have follow the current law, because you think about the investment is of property actually is will always change. It's better you have consult with the tax advisor or lawyer first before you go and move on. So for investment property, actually when you purchase a property and you want to change to another property, make sure that your current property is whole at least 1 year. So you cannot be less than 1 year. And this purpose is not for people who want to buy and then you want to fix it and then you want to flip it. So this is not qualified for this exchange, this benefit for you to exchange. That's you want to know. Then rule number 2 is for exchange is actually from your current property, then you want to sell it out because your purpose you want to buy another property for investment. So that's rule number 1. And the time period for you to go and get your other property, which means that now you already sell your current property, so the period is 45 days for you to find out another new property come in that you can look at to the new one, want to move to the next property. So you just have the period of 45 days. That's rule number 2. So rule number 3 is you have 180 days for your replacement period, which means that now your current property want to sell. After you sell it, you have 45 days to find another new one. Then the process to complete all the SPA, everything else, exchange all the title, everything else, you just have 180 days you need to do that. In this period, you can exclude the debt. So rule number 4 is you must have a qualified intermediary requirement, which means that you need to find the people is actually for the third party that's hold your money. When you already sell your current property, that money is held by third party that actually is separate the account from you. Then it's a licensed intermediary, which means that the proper intermediary can hold the money for you. Then when you choose about the person that hold the money, actually you need to trust the person that you trust, and always remember, verified. You must trust but must be verified, because nowadays a lot of people get lost their money. Everything else is because they being trust to the wrong people. So when you want to find the people that holding your money, the person that you need to believe is in yourself, and you need to trust and then be verified. So before you move on. So the rule number 5 is title holding requirement, which means that when you do this part or everything else, you need to have complete exchange using the same taxpayer with the same person that you handle your current property that you sell, so that they can hold on all the documentation, everything else. So it's best time, everything else, when you want to start this type of exchange 1031, that's better you plan out everything else. And because the best time to structure the sales of your property to minimize the tax is when you first buy it. When you want to do everything else, then better you already know, and then you plan what property you already want to buy, what property you want to do. So these people, you already plan it, want to sell everything, you plan it out first before you move on. This will save you a lot of time. If not, later you just sell this one, but the period you cannot catch up. You need to know the period. So number 6 is when you buy and you want to move on to the next property, you need to buy the property which means they have an equal value or higher value than the current property. Because when you buy the property, you from this property you change to another more smaller price property, then also the difference, the gain from here will be taxed by the tax. So when you want to change from current property to another property that you want to invest, make sure the price is higher or equal than the current one. Got it? So when you talk about, if you really need some cash when you selling your current property, and then you get, for example, before that you sell your property, you buy property is about 200k, then you sell it for 400k, then you earn 200k. Maybe you need some cash, but when you want to do this method, actually it's better you use up all your money to put on a new property. Then if you really need some cash, actually you can do something what we call refinance after that to the new property that you already moved to, so that you can use that method to do refinance. So, and the other method when you want to do is actually you can do it after the 180 days when the exchange has ended. That's the second method that you can do, but that's better you can do refinance or everything else so that it can move on to you. So this is a method of just one part of the method, what we call 1031 exchange. When you want to from your current property change to a new property, this method you can consider, and always make sure before do anything, consult with a expert first, the professional tax advisor, or even though lawyer you can consult also, because they are the people, they will know all the current situation, or if got an experienced person you can consult with them, so before you can move on. So this method actually can help you save a lot of money, and you can get more money and earn more money. So hope this will help you. See you.